Hello and welcome to Big Deal. Now, Advent International, which is a foreign private equity firm which has invested close to about $6 billion in India so far, has assets under management worth over $90 billion globally. And they are with us right here on CNBC-TV18, the top team of Advent International. Let me welcome on the show David Mussafer, James Brocklebank, as well as Shweta Jalan. Thank you so much for joining us right here on CNBC-TV18. Now, David, I'm seeing you after COVID. There has been a long gap, and you haven't spoken about overall India perspective and how the world is really looking for this particular year. There are several events that we have started 2024 with. What's on your radar as an investor in terms of the sentiment building and taking investment decisions?
Well, firstly, Nisha, thank you for having us. It's a delight to be back here in Mumbai with our team and with you.
Thank you so much.
You know, as 2024 starts to come into focus, we're seeing a lot more balance in some of the global economies around the world. And so as monetary policy has come back in line, we're seeing opportunities that are beginning to come forth. Yes. And so while there were significant headwinds, certainly from the financing perspective that we saw in the previous year and during the middle part of COVID, we're really seeing some of those. And so for us, we found a more robust environment, both for new investments and exits. Yes. And in particular, we're really excited about some of the trends that we see and have hold right here in India.
All right. So many new themes have also emerged after COVID. So I'll pick your brain on that a little more. But James, good to have you here in Mumbai. And how do you see the prospects in India for the current year? What is the overall? Because most of the private equity firms are gung-ho about India for the next 5 years of the potential that you see. What's your view?
There's so much to like about the Indian market. I mean, the demography is obviously the first place. You have this rising middle class, but you have a population that's well-educated, but also ambitious. You know, we like that. We have so many interesting themes to play as a private equity firm here, and we'll talk about some of those. But we're very excited about what's going on. We have stable government. You have very consistent GDP growth, sort of the 6-7%, apart from COVID. All very attractive features for this market. And I'm also very impressed by some of the things like the digitization program that's happened here, the Aadhaar card that we were seeing yesterday as we were talking to some of our friends here. It's very impressive. So it sets a very attractive backdrop for a firm like ourselves. And also in private equity, the market's grown a lot. It's now about $12 billion a year in private equity, and about 50% of the companies are over $500 million. So it's a scaled market as well.
Right. So a lot of areas to really look at investment also, a lot of potential in the economy. Exactly. But what about the allocation? Is that also going to increase? A lot of private equity firms have increased their pace of investment into the country.
Absolutely. You know, we said last time we met that we'd have a target. We actually exceeded that target very significantly. We said, I think, about 1.7 billion, and we did about 4.4 in the end. For the next 5 years, we would like to commit something like $5 to $10 billion here in India. So a very significant growth. But that reflects, you know, the prospects that we see in this market.
Right. So, Shweta, obvious question to you. You have a much larger pool of money to play with, to invest in the Indian market. What are the areas of interest? I know your 4 or 5 areas that you're most interested in, but what's looking very compelling right now for you?
I've always, said this to you, Nisha, right? For us, it is, the 4 or 5 key sectors that we like, which, we are well aware of, which is healthcare, financial services, consumer, tech services, and manufacturing, which we can talk about a bit more, which is a relatively newer sector that we are focusing on. Within that, I think we are opportunistic in terms of, we really look at the micro characteristics of a company, right? What do we look at individual assets as opposed to just thematically say, this year I'm going to do more of financial services or more of healthcare or more of consumer. So it's really about what assets we find within those sectors and subsectors that we really like and invest in those, right? So that's the way I would continue to think about investing, and that's what we've done over the last 5-7 years as well.
Right, but manufacturing last time you told me is one of the sectors that you are now recently starting to get excited about. What is it in manufacturing? Because this particular space really requires a lot of capital, and private equity has really not given that growth capital so far because the requirement of debt has been higher. But what is it in manufacturing that private equity can really participate in?
I would say across the board, right? I mean, the theme we like, and we've played that in some other sectors like pharma, right? The whole China Plus One strategy. Can India become a true challenger to China in some of these subsectors? And those are the subsectors we're trying to identify and evaluate whether there is an investment opportunity there. So we did that, for example, as you know, in our API pharma business, right? Yes. Where India is really becoming a good alternative to China and supplying APIs to the world, right? Likewise, here we are looking, I would say across the board, typically, which we haven't, right? Which is electronics manufacturing. It could be auto components. It could be chemicals. Again, we've done a chemicals. Part of our deal in Suvain is chemicals as well, right? Where we are becoming a true alternate to the China suppliers, right? So I wouldn't say there is a specific subsegment within manufacturing, but as a theme, we think what we want to chase is where can India become a true credible alternate supplier to the world.
Right. So specialty chemicals was one of the areas that we spoke about in China Plus One strategy. Now, James, how do you see India's competitiveness compared to like other emerging markets? And which are the areas and pockets of potential or the factors which are on your radar because of which you would look at India more positively now?
Great question. I mean, financial services is a good example. So in financial services, for us, it's a question about growth and an opportunity in India because you have this financial penetration story that I mentioned, which means that you can invest in asset-heavy, so balance sheet type financial service and still get the kind of return that we would be looking for. By contrast, outside a growth market like India, so if we take North America and Europe, it's much harder to get that with asset-heavy balance sheet type businesses in financial services. So there, we tend to do more in fintech. So in payments, for example, we've done 16 payment deals over the years, investing $6.6 billion. Whereas in India, we're more focused on things like, you've seen us use things like Credit B or Yes Bank. So these are more balance sheet financial services, but where you have this very interesting growth profile, partly driven by this financial penetration story.
Right. So financial penetration is one big theme for India. And of course, our government has focused a lot on financial inclusion, also going to the underserved areas as well. Now, David, looking at the overall perspective, I want to get a sense from a foreign investor looking into India. The mandate for the new government, that is one thing that has always been on the radar for foreign investors, the certainty on policy, as well as the reforms that have been really showcased by the government. How much of weightage would you put to that in terms of the positivity around India, and what are you expecting from the reforms and policy framework?
Well, we've already seen some of the benefits of that. We talked about that the last time we were together.
That was
this
many
has
years
been
back. Yes.
a real continuing theme and one of the attractive elements for the country, in large part the stability and the trends that we see. The other element, when we look as an investor, we invest in several sectors, not just a few. And India offers opportunities in each one of those areas. And so we're seeing the benefits from improved regulatory environment, but more broadly, some of the geopolitical problems that we're experiencing in other parts of the world are also making India more attractive on a relative basis.
That's right. Yeah. So on a relative basis, India is looking much more stable, is also something that has come out from many investors like yourself. So Shweta, now you spoke about the various sectors and manufacturing as well. Now, financial services is something that James alluded to. And we have a lot going in the financial services space. Yes Bank is a very big investment that you made. And of course, you spoke about how pleased you are with this particular investment. What's your focus now on the overall financial services? More banks? What kind of investments? And with the kind of disruption fintech is seeing right now, is that a no-go area?
I mean, fintech, typically digital lending, of course, we have done in Credit B. But broadly, if you look at it, we've always stayed away from slightly younger companies which are loss-making, which don't have established business models. So I think that will never, I mean, at least as it stands today, is not a focus for us. So never say never. But that, I would say, is not something we are focusing or looking at this point in time.
Right.
Our focus area continues to be looking at lending businesses. We've done, obviously, Yes Bank. We have exposure to Aditya Birla Capital as well and Credit B. So three, we have a bank, we have a broad-based NBFC, and then we have, a digital lending company. There are other themes within lending that we are evaluating and looking at, which is something you mentioned, underserved parts of the market, right? Could be microfinance, could be housing. So those are other pockets which we haven't done outside of being a sub-part of the businesses that we've invested in. Our areas that we continue to evaluate and be excited about. We used to own an asset and wealth management business. We continue to feel wealth management is an exciting area in India, right? So if there's a right opportunity that comes by, could we look at revisiting that? I would say yes, because just given the way people are now investing their savings, the participation of retail investors in the capital markets, you're seeing all of that change meaningfully year after year, right?
Right.
So that could be an interesting sub-segment as well.
All right, so all these on your radar right now. But when we talk about Yes Bank, Shweta, there have been rumors about State Bank of India maybe selling some part of their stake. Now, I know that, private equity investors came after the bailout plan, getting the comfort from the largest PSU bank, having the stake there and having a say there. Does it change anything if SBI wants to partly or fully exit from Yes Bank at this point?
So honestly, first, I don't want to comment on speculation, whether they're exiting, whether they are staying. So I won't comment on that piece for sure. But I would say we didn't invest behind Yes Bank because of a particular shareholder or another shareholder. Our thesis on Yes Bank was the balance sheet is fully cleaned up. It's a book that we know what is being stated is what the real book is. So that comfort we had, that cleanup, obviously the public sector banks and other banks who invested capital behind this business was used to clean the balance sheet up completely.
Right.
That comfort we had, and then there was the other elements of the thesis, which was growth in the emerging leading corporates and their small and medium enterprise segment, the retail growth, improvement in cost to income ratio, and the whole digital back end of the bank, right? Which was, I would say, one of the youngest banks in the country. So obviously relatively a lot more new age than many of our older banks, right?
Right.
And those elements of the thesis are playing out. We continue to remain excited. So I think it's irrespective of shareholding of the bank and how that changes. I don't think that influences anything that takes this bank forward from here on. It is truly standing on its own feet, on its own merit, and its own sort of financial performance, I would say.
All right, so a big pat on the back for Yes Bank from one of the key investors there. We'll slip into a short breather, but hold on to your thoughts. We'll come back and talk more about your investment plans in India. So right after a very short break on Big Deal. Stay tuned.